I think it was really disappointing for the Aussie share market. Markets all around the region were higher, and we saw a great lead coming through from offshore markets overnight. In fact, the US stock market saw an increase of 0.6%. Some of that was on the back of that trade deficit, which narrowed, and which did see some investment houses upgrading fourth quarter GDP expectations. And that news was enough to lift a lot of Asian markets. But Australia really did miss out. If you have a look at the intraday graph, we started off well, but you can see that we lost all those gains. And in the end, down just 1 point, so very flat for the Aussie share market. I guess this time of year, it is a very quiet time of year, but it's also a time when money managers are allocating money towards different assets. So it's really a time when strategic asset allocation does come into the picture. And I guess looking at Australia, there is a view that emerging markets could underperform, and Australia as having access and coverage of the emerging markets, I guess is an underperformer because of that region. Having said that, we saw some stellar performances on the market today. We saw Xero up by 7.5%. It does look like there was a hedge fund manager talking about that stock in a blog, and that's managed to give that particular stock a lift. Magellan Financial Group also doing well, up by 5.5%. On the flip side, though, we saw Forge actually down by 16%. So amazingly, it's amazing how fast stocks can go up and also how fast they can go down. Ausdrill was also down by 6%, and Bradken was down by around about 5%. So that loss in the mining services area, I think, really does signify that the market is worried about growth at the moment, especially coming through from China and emerging markets, and that was reflected in the mining space as well as the mining services space today. Emerging markets have been cheap for a long time, in fact for a couple of years, and unfortunately the case has been that what's cheap has become even cheaper, and we've certainly seen that in the performance of a lot of the countries around, a lot of the stock markets around the region, where we have seen the Shanghai Composite losing ground in 2013. Not only that, the Indonesian, the Malaysian, the Singapore markets also coming under pressure. Now, I think one of the key themes in 2014 will be that strengthening US dollar, and that strengthening US dollar is because the US economy is strengthening and also tapering, and that has implications for emerging markets as well, because what we've seen over the last 3 or 4 years is very cheap US dollar funding, and as long as long-term bond yields start rising in the US, as we've been seeing, and the US dollar strengthens, unfortunately that has negative implications for emerging markets, the cost of funding and growth as well. So I think that's one of the fears, and I think that's one of the key themes to watch in terms of how that translates into the Australian share market and what it means for the Aussie share market. When the Aussie dollar is falling, I guess that's bad news for foreign investors here, and I guess foreign investors are the marginal buyers and sellers in the Australian share market. So it means that the Australian share market is going to struggle to attract foreign capital while the Aussie dollar is falling. But secondly, as foreign currencies are strengthened because the Aussie dollar is weakening off, we may see more international takeovers coming through for the Aussie share market. And then finally, the lower Aussie dollar, of course, great news for Aussie earnings, and we are expecting to see earnings growth coming through in the current financial year, and that's something that we're going to be watching very carefully come this February earnings season.
Magellan, Julie, your thoughts on the outlook for this stock?
I mean, this is a darling of the market at the moment. They're seeing strong growth, but it is a very expensive stock, so they will need to maintain that momentum in terms of earnings to maintain the valuations that they have in the market at the moment. But I think with the market improving throughout 2013 and expected to continue to improve throughout 2014, one of the areas to be watching is that financial services area. Magellan Financial Group, Henderson, Challenger Financial Group, all these type of stocks should do well on the back of improving market sentiment.
And while we're talking stocks, Julia, we spoke about it earlier today. It was the top performer at that point. I think Certex in the end closed up 16%. Quite a performance.
A great performance by Certex, and an absolutely amazing company. Usually if patients have liver cancer and they undergo chemotherapy, chemotherapy targets both healthy tissue as well as the cancer tissue. But if we have a look at Certex's product, which is selective internal radiation, or SIR SPEARS, what it does is it targets the cancer tumour, and the healthy tissue receives very low radiation. Now, we've seen very high rates of growth coming through for Certex in the second quarter, which is a bit of a relief, because at some stages during 2013 we did see some lower levels of growth. So we did see growth of 18.7% coming through in the second quarter. Now remember, Certex is very underpenetrated in this market, less than 5% of its markets. So there is still strong potential for growth. And one of the key things that we're watching out for from this company is the Surflox clinical trials. And we're watching that because at the moment, Sirtex's product is used in late stage cancer. And if these clinical trials do prove efficiency in early stage treatment, then we could see adoption in early stage liver cancer, and that would be a positive for the company. So Sirtex doing well today. I think this will be a biotech company to be watching in 2014, especially if those interim results from that Surflox clinical trials go as well.